What is going on, traders? What the hell happened today? Let's get right into it. I'm here to provide some much needed context about the minus 2% day we had in the S&P 500 and the minus 3.5% day we had in the NASDAQ. Is this the start of something bigger? Is this the start of a recession, as apparently some people think? Well, let's get right into it. We do have some data. I'm going to go over the charts. Maybe this will be a quick video. I don't know, but you definitely want to stick around because it's going to be super data driven. And then I'm going to go over some ideas, what I'm doing with some of the trades that I'm taking, what I'm doing with some of the investments, etc. Let's get right into it. So I posted this today on X. Follow me on X and IG for daily trading and finance content for free that I post daily. But here I said the S&P 500 hasn't had a minus 2% decline in the last 357 days. That's wild. This snaps the longest such streak in 17 years. We are allowed a pullback, of course, and I said calm down. For now, the only time I'll consider a bear market thesis is when the Fed cuts. And I've been consistent with this time and time again. You guys that are familiar with this channel know that. So yeah, I mean, this is an impressive streak. It's crazy that we haven't had a minus 2% day in almost a whole year, minus 9 days, right? 365 days minus 9 days. So looking at the chart here, if we take a look, I want to look at the S&P 500 first. But if we take a look, this obviously doesn't look that bad. If you look at the weekly chart, this is the all-time high. We're still just a few percentage points away from all-time high. But in this case, if we look at the daily chart, you can see that we are sitting at the 50-yard line, at the 50 SMA, the 50 simple moving average. There is nothing structurally here, at least just from a pure technical perspective, that tells me that it is time to panic. Obviously, as I just read out to you, we had a historic run, almost an entire year without a single day that went minus 2%. So we are definitely bound for a pullback. This is a historic rally. Now, the second thing that I want to point to is the VIX. The VIX is up an impressive 22.5%. And I am also taking out a put position on VIX. I'll describe that more in later detail. But usually when the VIX spikes like this isn't the start of something. Usually when the VIX spikes like this, at least in a bull market, when the VIX spikes like this, usually that is the sign of a major pullback after the market has run hot. So the last time that we had a similar spike was in the first couple weeks of April. And if we take a look at the first couple weeks of April, what happened there was the only minus 5% pullback that we've had all year. Remember, hearkening back to my last video, I said that the S&P 500 averages a pullback of minus 5% 3 times a year. We've only seen it once this year, which were the first 2 weeks of April, right? And then so far, this right here is not even a 5% pullback yet. So we haven't even qualified that. I think we might, obviously, but we haven't even qualified that yet, right? So all in all, these are typical features of a bull market so far, right? And the only people that are panicking are the people that don't have this type of context. Now, there is a time to panic, or at least a time to start trimming. And we will get into that in a second. But if we look at the NASDAQ has suffered a lot more because it's more tech heavy. It is way more concentrated and not as diverse as the S&P 500. And there obviously aren't as many companies in the NASDAQ as there are in the S&P. But the the NASDAQ is down almost 8%. So we are almost sitting at the 100-day moving average. Now, again, the first couple weeks of April, we actually hit the 100-day moving average. To me, if you look back, even going all the way back to the end of the bear market, the 100-day moving average it doesn't have to land on it exactly, but it is, right around the time that the market gets tested. We saw this in October 2023. First couple weeks of April, and we are seeing something similar now after the market has had a historic rally. And I just want to go back to the VIX, the issue or the correlation between the VIX and the S&P 500. If you look at this, you could see that the last time the VIX spiked like that, the S&P 500 went on to have another 14% rally from the spike of that VIX. That's not to say that every time the VIX spikes, the market rallies, but when does the VIX spike and what does it represent? In this case, it still represents a pullback. There is nothing structurally damaged here in the S&P 500. As a matter of fact, I bet you, and I didn't do this before, but I bet you could draw a very nice trend line still that let me increase the opacity on this, but you could draw a very nice trend line still going all the way back to October 2023. Now, I'm going to get into briefly about why this happened. Obviously, you don't need much explanation besides the fact that this right now is just a routine pullback. But I'm going to get into a little bit of why that happened, and then I'll talk about how I'm positioning here. So obviously, we started the Mag 7 earnings. We had, as of the time of this recording, we had Tesla earnings and Alphabet earnings. Now, Alphabet crushed earnings. Tesla missed on earnings per share, and it was the second quarter in a row that Tesla saw declining profits. Obviously, it wasn't all bad. There is they hit a record in terms of their energy storage business. They actually did beat on revenue, etc. So it's not all bad. This is not a Tesla video, but basically the disappointment from the EPS, the earnings per share, and the disappointment from the back-to-back declining quarters of net income is what led to Tesla declining. Tesla is one of the Mag 7. Obviously, we've had stocks, all the chip stocks, for instance, have been running hot as well. So it wasn't just Tesla. If you take a look here, you could see that Meta was down 5%, Alphabet's down 5%, AMD's down 3%. You could see Nvidia's down 7%. You could see that Tesla is down 12%. Apple's down 3%, etc. So it was a market-wide correction. It wasn't only Tesla, but Tesla might have been the catalyst that allowed the chart to play out. Now, with regards to Tesla, I posted this on the 21st, which was 2 days before their earnings. I said Tesla has spent a couple of weeks at its 2-year trend line. However, closing below it on the weekly is not bullish. As you can see here, it did that on the logarithmic scale. I had a lot of people in the comments arguing that it did close above, but they're looking at the regular scale. I said if Tesla fails to close above 254 this week, my next price target is 205 to 220, which is where it is at right now. So definitely interested in a potential position in Tesla here for Q4. I might do a separate video on that. And for earnings, I just played a simple strangle, buying a put and a call at the 25 delta because based on the data that I had, Tesla beats the expected move most of the time. So I thought that it would beat the expected move whether it went up or down, and it did. And we got rewarded on that. I actually sent this out on X as well as IG. So follow me on both of those platforms. So made a nice little profit here. Obviously on the Tesla shares that I had, I expected there to be some sort of drop, and I was okay holding through. I did sell the 270 calls as well. Before I get into the rest of the plays, I'm going to talk to you about when I'm going to be panicking, right? If you take a look, this is something we've been tracking for a very long time, but the 10-year minus the 2-year, this has been inverted since May of 2022, right? This is June of 2022. But this is the longest, one of the longest periods of inversions ever. This is the 10-year yield minus the 2-year yield. And it is so close to uninverting here, hitting a low of minus 0.09 or a high, depending on how you look at it. But it is almost uninverted. And if you're familiar with this channel, you know this is one of the things that I'm looking at in order to try to determine around when we're going to get a recession. However, if you look at this, this is not a great indication of timing of a recession, just that when it uninverts, you can be certain a recession is coming. So if you look here, for instance, in 2007, the first time it uninverted was May 2006, and it wasn't until November 2007 that we got a recession, so almost a year and a half later. But if you take a look here at in the year 2000, it uninverts in December of 2000, and then by January 2001, we hit a recession. If you look here all the way back in 1990, we actually uninverted for the first time June of 1989, and we didn't hit a recession until July 1990, so a full year later. So this is why I say all the time, you want to be invested in the market because you cannot time a recession. There is a moment at which I will consider rotating into something like bonds and cash and gold, etc., but not at the mere event of an inversion. However, I do like to keep tabs on this, right? The second thing is the 10-year 3-month, which is so far away. Now, we've never had a recession when only the 10-year 2-year uninverted. The 10-year 2-year has to uninvert, and the 10-year 3-month has to uninvert. So we are so far away from that. The short-term yields are still, paying a shitload. This is all going to depend on when Jerome Powell cuts, because the Fed affects the shorter term of the curve, right, with the Fed decision. And we do have next week, as of the time of this recording, the FOMC. They're not expected to cut rates. They could do a surprise cut, right? Who knows? They could do a surprise cut. Right now, I'm expecting September to be the first rate cut. But, just the mere fact of the 10-year, 2-year uninverting is not going to get me out of the market until the 10-year 3-month, which is a much, much better predictor in terms of timing of a recession. Because if you look here, we uninverted in August 2007, November 2007 recession. We uninverted in January 2001. Right there, we had a recession. We uninverted in November 1989, July 1990, we had a recession. So it's a much better predictor of the timing of a recession. So I'm going to look for those two things to uninvert. And then obviously I'm going to look for when the Fed cuts rates. Here's something I shared with you before, but on the left is the 2000 bull market leading into the 2001 recession. And on the right is the 2007 bull market, the ending of it leading into the 2008 financial crisis. And if you look, the initial rate cut, this gives the clue of when the recession and the ensuing bear market are going to start. And here you can see in the yellow, September 2007 was the initial rate cut. So for me, this is the formula that I'm going to be following, right? Uninversion of 10-year, 2-year, uninversion of 10-year, 3-month, and the first rate cut. Simple as that. If I lose a few percentage points off of, in the market, so be it. But that is what I'm aiming towards at this point. And I'm going to be treating this as of now unless I get further data as just another pullback in the market. So I did start a position on VIX puts here. I did send that out in the trading floor in the private trading room, as well as I am looking at adding a few stocks here. Chipotle is one that I had already sent out. 50% of the previous retracement point absolutely killed earnings as of the time of this recording. Once again, another stellar quarter for Chipotle, so happy to grab it on this major discount here. I am looking at a new Tesla position soon. And then, as I said, anytime the indices drop by 10%, I don't care what is going on. Anytime QQQ or SPY drop by 10%, I'm adding that to my long-term retirement portfolio. Obviously, this is not financial advice. I'm just telling you how it is that I invest and what's done good for me over the last couple of decades. So anyway, that is it for this video. If you want to get my up-to-date plays, my day trades, my option swings, etc., link is in the description below. It is the best bang for your buck as far as I'm concerned, because you get it all. You get the option swing trades, you get the futures day trades. We mostly day trade futures. You get the long-term stock alerts, you get the market analysis, etc. All of that encompassing. Link is in the description below. Let me know what you think of this video. Do you think this is the start of the mayhem? Do you think this is the start of the recession? Do you think this is just a typical pullback or correction? Are you buying anything on this dip? I would love to hear from you. Let me know in the comment section below. Subscribe to the channel. Hit that notification bell. Stay safe out there, traders. Peace.